Great to see you, Reetu. How are you?
I'm good. Thank you for having me here.
I like your red.
Oh, I like your red as well.
We had a very good idea here. Delighted to have a moment to chat with you. We'll let everyone know that they can send their questions in over the next half hour for Reetu on any of these topics that we've suggested. But let's begin with the fund. Launched in February, we spoke to you then, in and around then. This is an alternative fund. Remind us of how this sort of began, a bit of the genesis story, if you will.
Sure, absolutely. So just to take a step back, the Fidelity Canadian Long Short Alternative Fund is a 130/30 long short product that really captures and allows fund holders to own the broader breadth and depth of our research platform. And so as a result, the fund holders can actually own what is behind the research, and that is the people, the actual research process, as well as our scale, which is what I think are our biggest competitive advantages.
So let's go into the people, the process. What
Yeah.
is the process when we're talking about that? What are we talking about?
Yeah, absolutely. So the process is it's a really good question because that's the genesis of this product. It's really all about our research process. It's been in place for decades, and it's been used. This process has been used by the analysts throughout that time, as well as the portfolio managers who are currently still with us. And that's what I just find so amazing about Fidelity here is that since I've joined, not a single person has left on the Canadian equity research team. And so there's something to that institutional knowledge and that process that has been in place for so many decades. So what is the process? There is so much that goes into the process. And so whether that's looking at industry drivers or company drivers, combing through financial statements, dissecting balance sheets, looking at valuation, looking at scenario analysis. And so there's just so much that we look at on a day in, day out basis. And it's not just about, looking at the financials and making these forecasts and looking at valuation. It's all about how do we come to those estimates? And that's where the Fidelity scale really comes in, which is one of the competitive advantages I talked about. So, being Fidelity, we have the fortune to be able to talk to whoever we want on the management team, whether it's someone on the C-suite or even someone in middle management.
Right.
We can talk to experts in the industry, like buyers and suppliers, maybe competitors. We can go do site visits around the world. We can go to industry conferences. And that information is all synthesized and brought back to the team, which of course, we have that longevity that I talked about. And because we have so many investment groups on the investment floor, the analyst in question can potentially talk to their counterpart in the U.S., talk to their counterpart on the fixed income side, talk to prior analysts that have covered the stock. And so they synthesize all this information and simplify it into a few simple bullet points, which is what we call the thesis. And so this kind of work just happens day in and day out. And this is what our analysts are doing constantly.
Tell me just a little bit about sort of alternatives and this particular fund versus there are other alts that we've been talking about that have been launched over the last sort of 2-3 years. There have been a few anniversaries actually recently that we've spoken about. What's the difference here? How would you differentiate?
Yes, absolutely. So this product is a little different. I think every alternative fund that we have on our platform has its own mandate and its own position in a broader portfolio. With this fund in particular, although it's called an alternative, I really consider it a core fund. And the reason for that is it's considered an alternative because of the shorting component, but it's really just the way I view it is it's an all ideas Canadian fund. And so that's a little different from some of the other alts that we have on the platform that go more North American or global. And so when I think about its purpose, I really think about it as being just a research-driven returns enhancer, such that we can, and it also has that rules-based approach that we're trying to maximize as well. And so we end up having more positions in this fund because we're trying to have representation of every single security that we have under coverage in Canada, which can range at any given time, but it's almost 200 that we have here covered in Canada.
You're looking at the TSX, you're looking at the main companies there. So we're talking about Canada and why this is sort of strictly Canadian. Let's look at the story a little bit of Canada versus the US. Feels particularly pertinent because Canada has just gone ahead and done an interest rate cut. I think everyone wants to know what that means for companies, mortgages, for everyone in the economy. But what does it sort of mean to the overall story? You're looking at Canada and not the US here.
Right.
How do you see that as, essentially a good strategy?
Yeah, so and that's a really good question because especially today we're seeing a little bit of divergence in with the interest rate cut that happened this morning. Canada is the first of the G7 to actually move. And so we are moving into an easing environment. So as I think about Canada versus the US more broadly speaking, from a market perspective, there's pros and then there's challenges. And so I think from a pros perspective, we've talked in the past about how commodities have looked very attractive. I know some of my colleagues on the team have been very vocal about
Recently.
Yes, been very vocal about the pitch for commodities. And so, we are a resource-based country, and so that's very positive for Canada. The challenges, on the other hand, are more around the consumer. So as we know, the Canadian consumer is more levered to interest rates relative to that of the US. And then the reason for that is because we have a mortgage term market that's 5 years in length rather than relative to the US, which is 30 years.
Right.
And so, but not only that, they have more leverage. After the GFC, the US consumer delevered substantially, and that did not happen in Canada. So there is a wave of maturities that are coming up from a mortgage standpoint, and in 2025 and 2026. And that's going to put a dent in consumer spending. So we talk to our bank CEOs, all of our CEOs for that matter, constantly. And an interesting tidbit that's come up is that if we're to market the mortgages, with your average household, consumer spending would be impacted. Discretionary consumer spending would be impacted between 10 and 15%. And so that's not going to impact the person's ability to pay the mortgage, but where does that come from is the question.
So when you have a long, short strategy and you're looking at perhaps the banks or whatever, making it through okay, but maybe struggling on a consumer discretionary side, the long short strategy could be a really interesting way to go at something like that. I'm not saying that's the exact problem you're trying to invest around, but it gives you options.
Right. It gives us options, but it also gives opportunity because while we can get ahead of the fundamentals, at some point the market will catch up.
Sure.
And that might be an opportunity on the long side.
So talk a little bit about how it works in terms of rebalancing, to what extent, sort of the active component of this. How does that work?
Sure. So from a portfolio construction standpoint, as we talked about, this is 100% Canada. And so it's really a product that stays in its lane. It's a 130/30 product. We have the way the portfolio is constructed is we try to really generate the alpha within the super sectors while have directional exposure to that of the market. And so the super sectors would be your interest rate sensitives, resources, industrials, and consumer. And so we're really trying to find that alpha within those super sectors. And so we do attempt to have equal weights within those super sectors. And when we do find that market drift allows for those position sizes to be outside of the parameters that we like, we just try to rebalance it. And it's a very dynamic process as a result.
Perfect. Okay. A couple of questions rolling in here. So let's hit some of them. Are mid, small, and large caps all represented in the fund?
Absolutely. And in fact, what we do, because we try to attempt to have the equal weighted positions, we actually have, from a factor perspective, we actually have a little bit of a small cap tilt. Because a large cap financials will be an equivalent weight to a smaller cap independent power producer. And so as a result, there ends up being a small cap tilt relative to what you see in the benchmark.
Other question is, so what is, okay, we're going to talk about cryptocurrencies. Let's go at it right here, because here's the question. So what is your opinion on the future of crypto in Canada, particularly? You manage, direct, a couple of other funds. One of them is Ether, one of them is Bitcoin. What do we sort of get from you on the overall direction of current cryptocurrency right now? And then
Yeah.
we'll dig in.
Yes, absolutely. So that's been a very, very volatile,
What a story.
yeah, yet interesting market. So we have just seen such a tremendous cycle since 2020, and that's largely driven by what we've seen from a liquidity and just a macro standpoint. And so we've seen, the liquidity that came in 2020 and 2021. And then in 2022, we've seen the tightening that happened. And what happened is, crypto followed. But in 2022, specific to the crypto market, there was a lot of failures of exchanges that happened, and a lot of
Crypto winter.
yes,
Yeah.
it was the crypto winter, and a lot of the froth that needed to come out came out. And unfortunately, there was a lot of fraud that happened that emerged when we went through that crypto winter. But as much as it wasn't great during the time, I think it's part of the evolution of the industry, and it was needed. And so since then, since 2023 and this year, we are coming off of depressed levels. We had a lot happen within the ecosystem. So we had the Bitcoin halving that just happened back in April.
Was that as big of an event as you thought? I hear different thoughts on that.
Yeah, it is and it isn't. I mean, theoretically, we know the supply, the whole idea of Bitcoin is it has a very fixed supply schedule. So we knew back in 2020 that in 2024, the halving is going to happen. In fact, that's one of the value propositions of Bitcoin. And so it should be out there in the market. It's very much expected. But typically what we've seen in prior halvings is you do see a run up either heading into the halving or thereafter. And we've seen that with every halving. Now, going forward, the halving will have less of an impact. So the inflation rate for Bitcoin went from just under 2% to just under 1%. And so that halving was only just 90 basis points, and that will subsequently get lower and lower. So I think on a go-forward basis, it'll be less of an event, and it'll create less volatility, but it's still very much, it's in the code. It's, it should be expected.
Literally. That's fascinating. So yeah, go ahead.
So as I was saying, so then we had the halving, we had the ETFs get approved. The Bitcoin ETF in the US got approved earlier this year. We just had the ETH ETF get approved, and that was a little bit of a surprise. That happened before many expected. And then now as we go forward, you think about the crypto space and the value of Bitcoin, and it's really as a store of value. And so we've seen it really improve in terms of pricing more recently, as we've seen trends on de-dollarization and concerns about the debasement of fiat currency.
It's
with the fiscal, it's moved, and that is very interesting, because that historically it does not necessarily have such a high correlation, but it has moved with gold under the same de-dollarization view. As well as the debasement view. But we're also, if you think about it, we're moving into an easing environment, as we saw today in Canada. Of course, Canada was the first of the G7 to move, but that's typically when you see crypto do a little bit better. And so as we think about the cyclical setup here, I think it does better in easing environments than it does in tightening environments. So that's a positive. But even just within the ecosystem itself, there's so much happening. Within Bitcoin, it's been historically known as a store of value, and that's it. And there's been other tokens out there and other blockchains that have been evolving. Like, we had Ethereum that's really moved into this decentralized finance world. And Bitcoin's just been kind of that, just more of a store of value, more of a safe haven within the crypto world. But now we're actually seeing more activity happening within the Bitcoin ecosystem. And so there's a lot of building that's happening on top of the Bitcoin blockchain that I think will be really interesting. We're very early days. It'll be very interesting to see how that transpires, and just trying to make it more relevant to decentralized finance, similar to what Ethereum is.
So fascinating. And so where does that fit into a portfolio at this stage? And you can see that, as you say, it would be an evolution probably, but for now, for those thinking about it, in a short-term horizon, where does it fit?
So I view cryptocurrencies, specifically Bitcoin and ETH, as being very much a diversifier.
Okay.
And so what we have seen is that it has been an uncorrelated asset class. It's really an asset class on its own, and it's been very uncorrelated over the tenure of its existence. It became very correlated with other asset classes just in the past few years. But I would argue that many asset classes converged in terms of correlation. And so it wasn't
It's been strange lately, yes.
right. And it wasn't necessarily just crypto.
Okay.
So now as you look at the correlations, they've actually decoupled again, which is very important. So it really does have that narrative of being a diversifier. And so what we've done when we've done our internal work, we've seen that if you just add in a 1 to 3% slice into portfolios, looking at historical data, rebalanced quarterly over time, what we've seen is that it can improve your risk-adjusted returns tremendously. So we look at the Sharpe ratio, and the Sharpe ratio is improved by up to 34%, depending on the allocation used. So it's very much thought of as a diversifier in a portfolio.
So fascinating. If there's any other questions on that, everyone, just please send them in to Reetu over the next couple of minutes. I want to go back to the fund itself and just talk a little bit about back to sort of the differentiation between this fund and others. It's not meant to be market neutral, for instance. There is a fund that is market neutral that's trying to even things out. You say this is more of a core holding. Just kind of take us back to that a little bit, where it fits as a core piece of someone's portfolio. That's kind of a big deal.
Yes, absolutely. So I view this as just a core Canadian diversified fund that really offers directional exposure to that of the market, while really capturing the excess returns being generated from our research platform by going long on our buy rated names and going short on our sell rated names. So just to really capture that alpha being generated from the wider spectrum of our research. And so really capturing the accuracy, the consistency, and the repeatability of our research process. And so this year in particular, as we've seen in prior years, it's been very macro dependent, very rates driven. Everything like the market would move based on every data point that would come out. This year, I think it has shown to be a little bit different. And I think that's how it'll continue to be, where the PE multiples have kind of moved ahead of itself, and we really need to see earnings come through. So I think it's going to really be a stock picking year, and that's exactly what the team does best. And that's really what this fund is all about. It's all about the research, all about the alpha, all about the stock picking.
I think we'll put up a performance slide. So we mentioned off the top that this fund launched to investors in February, but as you say, you'd been testing it for some time. Did you say 3 years?
It launched back in 2020.
In 2020, perfect. Okay, so just sort of a sense of where you've seen this take hold and just over the market. It's been a lot of different market environments this has gone through.
Absolutely, and I think you hit the nail on the head, because the whole genesis of, we talked about the genesis of this fund. The whole idea behind the fund was to really capture the accuracy and the consistency of our research, but also capture the short side of the alpha generation. And so that's really coming through in the performance that we have. And so if you look at the performance slide that we have, you can see the excess returns, which represents the accuracy of our research. But you can see the excess returns over multiple periods. It's actually quite consistent.
It is quite consistent. It's sort of remarkably so, considering it has been a wild few years.
And that's exactly it. And so this fund is all about, regardless of the market that we're in, regardless of whether Canada is a better market to invest relative to the rest of the world or vice versa, it's all about the excess returns being generated and the consistency of it, which is being generated because of our research platform that we have. And what's interesting about this is I talked about the short component, and you can't see this on the slide that we have up at the moment, but what's interesting is I dissected the data in terms of the contribution from the short side of the fund, and it's actually on a grossed up basis, about 25% of the alpha being generated is coming from the short side.
That's fascinating. Oh, it's good to know, sort of under the slide itself. So, I mean, you have been very much part of the research team that is, led to, I guess, this fruition for many years. you go out and do some of these site visits you're talking about? I mean, you say the team goes out. Is there any recent, I don't know, visits or stories that you could tell us? I kind of like it when you're right on the company premises type of stories.
Yes, there's just so much that, you know, I talked about the research process before. There's just so much that goes into this research process, and our analysts, and to our knowledge, we have the largest analyst team in Canada. And so we have the ability to do this more because we have sector specialists really focusing on their companies day in and day out. So we just had a group come back from the Permian, which is in Midland, Texas. And I remember when I was the energy analyst years and years ago.
Oh, so many questions to ask you about energy. Okay, carry on.
So when I was the energy analyst years ago, I remember going on that Permian trip. And for me, I couldn't comprehend how oil's pulled out of the ground. And so really gave a really good, like you really got boots on the ground and you really got a sense of, okay, what's happening? Like, how does this all work? And so, but what was really interesting and fascinating about that was that when we talk to the C-suite of any management team, ultimately, you know, we have great productive meetings, but when you talk to people that are on the ground, you really get a different level of insight. Right. So I remember eating barbecue off the trunk of a pickup truck with the manager at the well site that we're at. And he was just telling us about how you know, like what the supply chain bottlenecks are, which company down the street is doing it better than them, what the executional issues are, where their friends are going, who's paying the most. And so you really get another glimpse of truly what's happening on the ground, where the hiccups can be from an execution standpoint, and what that means when you translate it into estimates and what that risk return would be. And so that's information that you don't necessarily get when you have a meeting with the management team. Of course. So it's really interesting, and that's being done all the time. And whether it's
these are the trips that Fidelity goes on all the time.
Yeah, absolutely. I have so many more stories like that. And so whether it's like in a mine in Africa or the Permian or going to northern Minnesota in the middle of January to look at pipelines, you know, we're all over.
Surprisingly like Canada. Basically the same thing. Fantastic. So if we just sort of think about a final message to let everyone know, maybe about crypto, but also about the fund itself and sort of how they might think about it if they have different investment strategies in their portfolios right now, how this might be something they either grow into or want to take a look at.
So I think two separate questions there. One on the Canadian long short, and the second piece on crypto. I view the Canadian long short as a return enhancer. And so it's, again, going back to it being a core Canadian fund, it really captures just those competitive advantages in our research process that our analysts are doing day in and day out. And I view this as an all ideas fund that you can really capitalize on not only the ideas that we're favorable on, but the ideas that we aren't favorable on. So really capturing those excess returns in a very consistent and repeatable manner. So that's how I view the fund as being more core. From a crypto standpoint, that's a little different. I view that as a diversifier. And going back to what we had said earlier, that you just need a 1 to 3% slice in a broader portfolio to capture the uncorrelated nature of the crypto asset class over a longer period of time.
Fantastic. Reetu Kumra, a pleasure to see you as always. Thank you.
Thank you for your time.